right, everyone, welcome back. We are pleased to welcome Zachary Mans, Senior Analyst, U.S. Equities of Elliott Wave Trader, and Garrett Patten, Senior Analyst, U.S. Equities and U.S. and World Indices of Elliott Wave Trader. Mr. Mans and Mr. Patten are the popular co-host of Stock Waves on EWT and are widely followed for their analysis of individual U.S. stocks at financial conferences, as well as sites such as Seeking Alpha. Zach and Garrett, thank you so much for being here. The floor is all yours.
Thank you.
Thank you very much. All right, welcome everyone. Before we begin to start looking at some charts, I wanted to give a quick introduction and overview of our methodology and how we approach our analysis. So most of you are probably familiar with Elliott Wave principle to some degree, or at least have heard of the term. Elliott Wave is basically the core of our methodology and allows us to approach our analysis from a sentiment-based perspective. However, what you may not be familiar with is Fibonacci Pinball. Fibonacci Pinball is a term that was coined by Avi Gilbert, the founder of ElliottWaveTrader.net. And what Avi noticed over the years is that when the market was trending in an impulsive structure, which is an Elliott Wave term, price kept making turns at the same Fibonacci measurements time and time again. It was as if the market was playing pinball between these specific fib levels as it filled out the entire impulsive structure. So we don't have a lot of time to go into a bunch of detail about Elliott Wave principle or about Fibonacci Pinball, but we can at least take a quick glance over the overall concepts. So the picture that you see currently illustrates the basic structure of what Elliott Wave principle is built upon. And that is a 5-wave structure, which progresses price in the direction of the larger trend, referred to as a motive wave, followed by a 3-wave corrective structure, which interrupts that larger trend. And basically this 5-3 structure allows price to progress within the direction of the larger trend while still allowing for variation and fluctuation along the way. So next up, I wanted to take a look at Fibonacci Pinball. And this 5-wave structure should be familiar as that motive wave, more specifically an impulse from Elliott Wave theory. And what we were referring to, or what I was referring to about price kind of bouncing in between specific fib levels as it fills out an impulse is shown here. What you do is you take the measurement of your wave 1 of that impulse and project that measurement from the bottom of wave 2, and that gives you these fib extensions higher. And what Avi noticed is that the subwaves within an impulse would more often than not hit the same levels as they progressed through that price structure. So the most common targets that we see is wave 1 reaching in between a 382 to 618 extension here. And if wave 1 hits a 382, then wave 3 typically hits a 100%. If wave 3 hits 100%, then wave 5 of 3 typically hits the 1382, pulls back to the 764 in wave 4, and then our 5th usually takes us on to the 1764. So this is just one of 2 common scenarios that we see during impulsive patterns. The other common scenario is, as I was saying, wave 1, instead of stopping at the 382 fib, extends on to the 618 extension here. And if you see wave 1 of 3 reach the 618 extension, then more often than not, your wave 3 of 3 will reach the 1236 extension, followed by a pullback in wave 4 between the 100 and 764, and then wave 5 of 3 on to the 1618, followed by the 4th back to the 100%, and the 5th on to the 200%. So again, not a lot of time to go into more detail than that, but you can kind of see how price is playing pinball as it fills out this impulsive structure based on those measurements from the initial wave 1 projected from the bottom of wave 2. And what Fibonacci Pinball does is it gives us a framework for Elliott Wave theory that allows us to really better interpret where price is within that specific Elliott Wave structure compared to just kind of making a general guess and what we call wave slapping, just placing waves where you think specific labels should go rather than actually basing them on a methodology like Fibonacci Pinball. So this really helps us both come up with specific targets and specific invalidation levels for our trade setups when we see, for example, a 1-2 start to a potential impulse to the upside. And we use this methodology a lot when we are analyzing within our Stockwave service upcoming earnings calls. So during earnings season, every day, Zach and I take a look at the most popular names reporting both after the market close and before the market open, and give our take on what we think is likely to happen based on what we're seeing on the chart and our analysis on Elliott Wave and Fibonacci Pinball. We also take a look at other things, supplemental things like short interest, obviously basic technical analysis, and even some fundamental analysis. We recently brought on a new analyst to our team, Lynn Alden, who some of you may be familiar with from Seeking Alpha. And she has done a great job kind of introducing a bit of fundamental analysis to supplement our technical analysis. So with that, let's go ahead and get into some of the charts. So Zach, I'm going to change it over to you.
Sounds good. Okay, so as Garrett said, in Stockwaves, Stockwaves has been around for about 8 years. Elliott was the first subwave service that we started to offer at ElliottWaveTrader.net. And we started looking using the same Fibonacci pinball methodology of the way that we apply Elliott Wave, looking, as Garrett said, at things that were reporting earnings. Initially, we started looking at it because we had a number of members who had very diverse stock portfolios, and earnings season was always full of pitfalls. So we really started looking at it just to see where things were in a broader context, and if there were any dangers going into this earnings season because they were maybe getting toppy. From there, we really started to notice some pretty nice opportunities where regardless of what the actual earnings report was, there was a potential turning point where the earnings could be a catalyst for a change in sentiment. So we started looking more closely at the earnings each day and trying to track our directional calls on those and keeping track of those. So we started adding, we added a new filter. For the last year or so, we've been tagging all of those posts as ER for earnings report. And we say what the ticker is and whether it's reporting that day after the market closes or before the market opens. And we have those now available where you can do a very quick filter under our services tab and go to Stockwaves and go to earnings calls and see everything that we've posted, the last, it goes back as far back as you want to scroll of the more recent earnings based on the date. So Garrett and I have highlighted a couple of charts that from this past earnings season, this most recent earnings season, that we wanted to look at in a little bit more detail, that really illustrate the way that we present our analysis and what we are looking at and what we're looking for in terms of what makes a good earnings setup. Part of it is just playing the probability. If we have a success rate that is anywhere between 65 and the mid 70% on a weekly basis in terms of all of our earnings calls, then by a certain metric you want to throw a little bit at each one because then play the probability of being in your favor that way. But there are some that are a little bit more standout, some things that we follow because they're in other watch lists and groups of stocks that we're tracking for our members that we pay a little bit closer attention to. So one of the first ones that we wanted to discuss here was Alibaba. So with most of the format for the way that we present all of our analysis in Stockwaves is kind of sometimes there's separate articles that go out and we produce videos as well, but most of the time it's threads, posts within our chat room by us, and then there can be threads and discussion and people can ask questions. So we'll usually post some text explaining a chart that we post, but I'm going to zoom in and take a look at the Alibaba chart here that we were seeing heading into earnings and what we were looking at. So in the larger context, this was holding a fourth wave as a nice corrective consolidation, and we were targeting a fifth wave up inside a larger diagonal that should have been an A, B, and a C wave move. Based on the structure that we saw off of the low, this held a really nice corrective retrace, got a really good move to start the move up. When this did only get back here earlier in May, when it only got 3 waves up, we said that there was a risk that the entire C wave could be morphing into an ending diagonal, but we should still get higher in the wave 1. But we were at least looking for a consolidation, more of a consolidation as the wave 2 retrace in that diagonal heading up. So on earnings, Alibaba dropped a little bit sharper than we thought that it should have, for that to be the parentheses wave 1 and the parentheses wave 2. But it did get the drop into the target region that we were expecting. It just was a little bit more abrupt. So we started to shift from that point to looking at this being a wider flat when it couldn't hold that immediate low that it hit after earnings. But we thought this was a really good illustration of how that fit within the larger context of a move heading into earnings, and that we were looking for that drop, and we got a pretty nice, I think that was, it spiked just a little bit, and then it was roughly a 7%, 7.5% drop on earnings, and then continued a little bit lower after the bounce. So now we're looking for this to continue to hold support in this 192 region, and then turn back up and try for that C wave.
Yeah, so as Zach was saying, BABA is one of the charts that we track on a pretty regular basis in our stock wave service. And a lot of members have current positions on that stock. So seeing that post that we were the very least expecting more of a corrective pullback in a wave 2 may not have necessarily led to somebody holding that stock, selling it, especially if they were a longer term holder, but potentially protecting it with shorter term puts or something for that potential downside to just mitigate that drop potential.
And then the next name that we wanted to take a look at was Baidu. Baidu is another name that we have been tracking for a while. It came into support into the March low that we had been looking for a larger consolidation as a primary degree wave 4, and had a pretty decent move off of the low that could count as 5 waves up and a corrective retrace to a 61.8% Fibonacci support level, and then had turned up and was up nicely up off that low in a pretty impulsive looking move after into earnings. Now, as Garrett mentioned, because of Fibonacci Pinball, as we can read the text there, we mentioned that we were right in that region of the 0.618 fib extension, which was at 107.64. So heading into earnings, we were right there. So there was the potential for some consolidation at a smaller degree. But this is the name for this size of a degree. A regular Arabic numeral with no parentheses or circle is minor degree in Elliott Wave proper nomenclature. We have noticed that sometimes a consolidation that's that size within a subwave inside of a minor degree move can sometimes be quote unquote skipped on earnings. That if the earnings were really, really good, that something like Baidu could just decide that it wouldn't show that normal consolidation that we would see back to, say, the 105 to 103 region, that it would just immediately continue to press higher and head more towards the 120 level as a breakout into that third. And then so pulling up the Baidu chart, what we actually did, again, that did spike more immediately higher without getting a proper wave 2 consolidation. But then from there, it faded. And this is one of the reasons why we wanted to point this out, is that a lot of times when we do get a strong move, even if it seems like it fits perfectly within the expected move for a larger, longer term, more established count that we've been tracking, a lot of times a lot of that move gets faded after the earnings in the sessions to come. So a lot of times you can establish a high level of support at whatever the gap open level is, and in the initial consolidation level, and then as soon as that low from wherever it was when it opened after the regular trading hours opens, a lot of times it can continue to fade more from there if that's breached. So if this was, we notified our members that if this was in fact the heart of this third, that it should really hold a high consolidation in the 114 region and then continue on up towards the 132 region. So the fact that it broke that 114 after getting the spike up on earnings that we had mentioned gave us the first indication that this might be morphing, so to speak, into a leading diagonal pattern for this larger wave one, where this initial move was just the A wave and this is a B wave inside that third, but was the first clue that it was not going to have immediate continuation higher, and that anybody who had been in from either our earlier support in May or playing for just the potential breakout on earnings was able to take some profit early on.
Right. Something to note about Baidu was this was actually one of our wave setup picks. We have a section in our service called Wave Setups where we tag charts that we view as good setups to place an actual trade on. We tag it as wave setups. So this was one of those picks. Coming into that May low, we had a nice entry on the long side in the low 90s. And going into earnings, because it hadn't reached that 100% fib yet at 119, we basically, it made us comfortable still holding through earnings, at least expecting that to be reached in the move. So basically there was no reason for those who had took the position earlier in May in the low 90s to sell at that point and at least wait until reaching that 100% extension, which is, a typical measured move target, even if the overall structure is corrective.
Oh, this was your chart on Baidu.
Right, so you can see on my chart that red C wave up there as the minimum expected target and that 100%.
All right, next is a chart, again, as Garrett mentioned, a lot of these are names that we've been following for setups that are more established. We maintain running counts, and because we look at earnings every season, there's a lot of charts that we at least look at once a quarter, if not, several times per week, because our members are requesting updates and are tracking those more frequently. And Motive Wave thankfully saves all of our counts in there, so we don't have to do a lot to quickly update a chart for somebody as long as it's progressing nicely within the established count. So ACB was a name that one of the cannabis names that we really liked, that had been stretching nicely with the rest of the moves, getting this extended fifth wave to complete the C of a primary degree wave 2 at the deepest of the normal retraces. But it had hit that 786 and had turned up nicely, was already up 13% that day off of the low. And we have really, in addition to the really nice 5 subwaves down inside of our C wave of wave 2 at a much larger degree, this is a primary degree, and into the ideal fib support at that lower retrace. We were looking for that extension. We have 5 waves down as a nice extended ending diagonal and a good potential reversal. So the longer term potential on this, it was really astonishing. So the risk reward from taking a small initial entry, usually we'd caution people because there's a little bit of extra risk around earnings season. So in terms of other positioning and core positioning, sometimes maybe you want to lighten up a little bit or take a little bit of protective measures, depending on what the chart suggests, into earnings. But despite the additional risk of earnings and this not having a lot of confirmation at any smaller degree off of the low, it was a very high probability confluence region for a significant low to start to emerge. And just the wave 1 in our primary wave 3 was targeting all the way up here at either the 382, which is the 38.2% extension, which is in the 27s, the 50%, as Garrett mentioned, in the 44 region, or even all the way up here to 7250, which is the 61.8% extension. So we were going to look for a 5-wave move here, and this was a good spot heading into earnings to get one's feet wet with at least some initial positioning. And ACB, you know, I don't even really pay much attention to what the actual earnings numbers are. So I don't even know if they announced that they beat, or if they just announced that they cured cancer, or if they switched to cryptocurrency. You know, we're playing the patterns for investor sentiment in the price charts and not paying as much attention to all of that data. But from that May 14th move into the close, ACB spiked considerably more and continued on the next day. It was up, you know, well over 100%, getting close to even 200% the following day into a high, which we think was the top of wave 1, even though we got pretty close to the 382 retrace, where it could have possibly been a slightly shallow version of all of that larger wave 1. There's a very good chance that this was still just the smaller wave 1 inside that larger parentheses degree wave 1. And then sure enough, it started to fade and consolidate from there. There is some chance that we see a little bit lower towards the 910 region again as an alt wider wave 2 if we can't hold support in the 14s. But a decent setup now on ACB of the start of the third of that larger move heading up towards the high 40s or even to the 72 region. And we also mentioned that this might be a good opportunity for, you know, some of those other cannabis names that we've been following closely to run nicely as proxies as well. Do you want to add anything on that, Garrett?
No, not on that one. I was going to say, though, in the interest of time, let's take a look at Snap as the final one.
Okay. Let's see, where's Snap? Oh, that's ZG, Roku. Oh, we did want to look at Roku.
Roku's a good one, actually. Yeah, Roku's a good one.
All right, let's go to Roku. All right, so here's Roku, and Roku is one that we have been tracking pretty closely. Well before earnings, it held our 4th wave support, was looking very strong for an ABC move up as the A wave inside of the larger 5th, similar to the pattern that we were looking at in Alibaba, but running a few steps behind out of phase. So there was potential for this to get some very nice extension towards this red 123.6% fib, Fibonacci level, which is a little bit further extension for this blue C wave in Garrett's count for the top of the A. But we did have a nominal new high. I think it got a little bit closer to the 100% extension into the close. So we did post a little addendum to the potential here for this to head immediately higher, that most of the move was behind us, and we could potentially count 5 waves up, completing with this as an extension of a smaller, more muted parentheses wave 5 into that 139 region. And so that did increase a little bit of the risk that this was not going to get more full extension. So some of our members might have tightened up some of their stops, exited some of their longer term positioning, and maybe put on, you know, some quote unquote lotto type plays to play for that more potential for more immediate extension, but take some of that risk off of the table. And that was one that did, I think it got a brief initial spike that hit 141.50 right in the initial move after hours, but then reversed that right away. It did bounce off of there the following day, back up towards the 134.50 region, which was pretty close to a double top again. So that was a little bit of a gentleman's exit. And we mentioned that, you know, if this was in the extended move heading up higher, that it really should have pushed higher, more directly higher on earnings. And so the fact that it got that drop increased the probability that this was starting the fade as the B wave already.
Right. I think it's worth noting on this one that that consolidation off the April high coming into the May low there is that wave 4 was another setup that we had suggested to our members as a nice long. And so going into earnings, you know, looked like there was a good setup to continue to extend beyond. The very next day, though, when it had stopped right at that 100% fib and then had immediately turned back down, that's when we said, you know, we have to be a lot more cautious now, protect your profits, because that was the measured move and that easily could have completed all of wave A.
I have Snap. I thought I had Snap. Oops. Maybe
You could just do a quick snap ER in the search there.
Yeah.
But Snap, on March 19th, we released a long list of about 100 stocks as we were expecting price to approach the bottom of the recent correction off of the February high. Snap was one of those names that we had been tracking as one of the candidates that we viewed as a very, very strong setup to get a big reversal off of that March low once we hit the bottom. So we had been tracking it since it had bottomed in March, and a lot of people got a really favorable entry early on, close to that bottom. And it had one of the most beautiful setups going into earnings with a nice 1-2-1-2, as Zach shows on his chart there.
So that's, and this was, not only is this a 1-2-1-2 start where you have this subwave degree that is nested inside the circle lowercase Roman numeral third, but you also had this larger minor degree wave 2 that had this strong bullish move right off of the exact hit. I mean, maybe it's a few pennies under the 618 retrace there as this nice purple expanded flat. So there was certainly potential to maybe try and consolidate a little bit more as an initial reaction, but really, really strong setup for a bullish move. And this is something that, you know, while there is potential to get some smaller, shorter term consolidation, maybe this was actually the circle wave 1 here, and it could come down as a little bit of a wider flat. Most of us are going to view this as a very, very bullish setup, and certainly have a position in place to play for the rest of this third, you know, with or without earnings. But heading into earnings, a lot of people saw this as a very, very good setup for earnings to be a catalyst for a pretty nice monster move. And I think Snap jumped. At one point it was up.
It was like 30% that day.
37% that day. Yeah, so we can zoom in here. And since it's held the high level to maintain that count, but because it wasn't able to advance more after that, you know, a lot of people recognize, okay, we got that strong move up. It hit a 37% move the day after earnings, 37% higher. Got initial consolidation and then started to advance. So that became our new floor. So anybody who was in from down here has been working off of the move in the 15s, and it's just been moving sideways. So still certainly potential for this to continue nicely towards our larger targets inside that green wave 3. But the structure here, and this is one of the benefits of the ongoing analysis that we do at multiple smaller degrees, is we say, you know, this kind of structure taking this long to move sideways when it should be in the heart of this more bullish move has us starting to consider, well, maybe this is just a corrective move up trying to complete, since we have a lot of other charts that are completing bullish moves off of the March low, and it's going to be due for some consolidation. Or perhaps, even though it seems a little bit too large, maybe this is working on 5 waves up for an even larger wave 1 of this wave 3, and it's going to consolidate again into later this summer back towards the maybe lower teen level, and then turn up and be very, very bullish again with the rest of the market.
Not a whole lot of time, but if there are any questions.
Yeah, it looks like we have a couple of minutes here. We did have a question come in. They were wondering if the tool that you're using is that available to your members?
Which tool? Fibonacci Pinball or Motive Wave?
They didn't specify.
Okay, so Motive Wave, the charting software that we use, is available for anybody to purchase. We tout it a lot because we love the functionality, particularly in just for any school of technical analysis and charting, but it's very catered specifically to using it with Elliott Wave, and it makes that very, very easy. But we don't receive any kind of compensation. We do have comped licenses from Motive Wave. In terms of the tool, our website, that's certainly available to all users to be able to use all the search functions and to find things within the services that they're subscribed to. And using the,
We do offer a free 14-day trial with no credit card required if you are interested in testing out the service.
All right, perfect. Someone was wondering what do you think about SDC ticker, Smile Direct Club?
Oh, that was
SDC
one that we were going to look at.
Yeah, we were going to look at if we had more time.
We're pretty bullish. It does look like the March or the April low completed a pretty significant consolidation, and it does have a nice 5 waves up. This is not really acting like the start of that third yet. And with most of the other things looking like they're coming into a possible local top, we're seeing the 9-10 region as possible resistance for a little bit more of a fade. But as long as this April low holds, and preferably holding the 5s, we're very long-term bullish on Smile.
And this was another one from our shopping list that a lot of people got a nice entry on early on in April.
All right. Question came in. Can any of these be used for Forex?
Elliott Wave analysis and Fibonacci Pinball can be applied to any market. So it's not specifically just for equities, but yeah, it can be used for Forex as well. We do have a Forex service on our site.
All right, perfect. And well, that one, I guess the answer would be yes. They're asking crude oil.
Yes, crude oil, commodities, Forex, cryptocurrencies. We cover pretty much all financial markets on our site. The only thing we don't have a dedicated service in is things like soft commodities.
But we do cover them in stock waves usually once a week in the webinar. We're asked about them, and
Right.
so we take requests. We have a nice on our site for stock waves and our mining stock service and crypto service as well. We have this nice request tool, so our members can type in any ticker symbol they want to take a look at, like snap. And it'll run a search of the last times that Garrett or I have posted that chart. And then you can click on that most recent chart, take a look at it. If that was from, this is from yesterday, so chances are it hasn't changed all that much. Although this market's moving pretty fast, so a chart from yesterday might be due for an update already. So if that doesn't fulfill exactly what you're looking for, then you can request an update. Although this one says it was updated in the last 24 hours, so I can't request an update, but somebody else could.
All right, gentlemen, that looks like that puts us right about at time. We really appreciate you taking the time out today for this fantastic presentation.
Thank you very much.
Yeah, thanks for having us.